With all this talk of an upcoming recession, all the debate on whether it's going to come in 2020 or it's not going to come at all, I'm going to share with you a couple strategies that will teach you how to invest in the market at any time, regardless if this big recession comes or if it doesn't. I'm the Gen Z investor, and on this channel we talk about investing and personal finance, and today I'm going to be sharing with you 4 different strategies to help you invest regardless of the economic cycle, regardless if a recession's coming, if we're in a recession, if we're in a bull market. These strategies can happen at any time, help you grow your portfolio at all times, regardless of how the market's performing. So the first strategy is to have rules and a system. So you need to have rules about what stocks you buy, regardless of how the market's performing. Do you buy dividend payers, growth stocks, blue chips, speculative stocks? You have to have a strategy of what you purchase. When you know what you purchase and you have rules and a system, continue to implement those rules regardless how the market's performing. You have to have rules on how you evaluate performance of companies and reasons to why you would ever sell a company. Don't sell because of how the market's performing. You have to sell your shares of the companies depending on how the company is performing itself. Just because the overall market dips 10% doesn't mean the fundamentals of your actual company, of the shares you own, are necessarily worth 20% less. Market news usually drives market performance. So don't focus on those large market swings unless the companies you invest actually have changes. When the market drops, even great performing companies, their share price drops. So don't be too worried about how the market's performing overall. Look at how your stocks are performing. Have rules and a system of how you evaluate your company's performance. Are they still meeting that performance metrics regardless of the recession or not? So a way to invest regardless of any economic cycle, you have to have set rules and a system on what stocks you buy, how you evaluate if they're performing well enough for your portfolio, and what metrics you have to know when it's time to sell the stock. Strategy number 2 is to have a balanced portfolio. This one varies for each investor. Some people are all equities, which are stocks. Some people have a mixture of stocks, bonds, fixed income, so on. So you have to have a balanced portfolio for your needs. So for this step to invest at every market is to have the ideal mix of stocks and bonds for your investment strategy. Personally, I'm all equity. I have lots of years to grow my portfolio. I'm not worried about the short-term price fluctuations. But for other people, that's different. So you have to understand who you are, and you have to have a set strategy of your ideal mix of stocks and bonds and what allocations you're going to have set for stocks, bonds within that portfolio. Some people do 80% stocks, 20% bonds, 60-40, so on and so forth. There's any different number of combinations you can create. But for you to invest at any time of the market, you have to have your ideal mix. As well, to have a little more balanced portfolio, you want to have some diversification across different markets. So instead of having all your investments in the Canadian market or all in the American market or European, you can choose to hold some stocks in different companies or ETFs that are spread across a more global atmosphere and global markets to save you from underperformance due to like the recession happening in one company. So if America goes into recession in 2020, the European markets might not be hit so bad. So if you have a small portion of your portfolio diversified across as many markets as you can, this could maybe allow you to have a better feeling when investing at any time of the market. As well, even if you don't choose to invest across different markets, have holdings in a variety of sectors. So I just listed some here: technology, financials, utilities. Diversifying across different sectors helps nullify some different recession occurrences. Sometimes some sectors get hit harder than others, so having your holdings spread across different sectors can help reduce that impact. So step number 2, or strategy number 2, or tactic to how to invest at any time, is to have a balanced portfolio. Regardless of the overall market performance, have a balanced portfolio so you can reach your objective goals over the long term, which leads us into step number 3, or strategy 3, which is think long term and wait. Forget about short-term trades. Unless you spend your all day, every day, analyze different charts, and that's what you want to do for a living, then you can be a short-term trader. But for the everyday investor who isn't a professional, who just wants to invest for their retirement, forget the short-term trades. Don't buy anything for short-term upside. Find solid companies that you have no problem holding for 5, 10, 15 years. Those are the companies you want to invest in. Short-term price fluctuations almost mean nothing for investors who have the long-term outlook. If you think long and you have a long-term outlook, it does not matter if your portfolio drops 20% in a year. Because if history repeats itself, which we all hope it does, the market has gone up 7 to 10% over the last 100 years over the long term. Doesn't mean each year it's going to go that, but the 1 year drop in 20% doesn't impact you if you have that long-term look, which makes you feel a little bit more safe investing when you hear the news that a recession may be coming, a recession's right around the corner, stocks are going to drop in a year. Although those are all predictions that no one knows if they're going to actually occur, those scare some people. But if you have that long-term outlook, you can invest any time of year, any time of economic cycle in the market, because you're not worried about those short-term price fluctuations. You're worried about over long-term capital appreciation mixed in with some dividends, long-term growth of your money. So strategy number 3, how to invest at every time of the market, is think long-term and wait. If you have the long-term outlook, you'll never have to worry about short-term price fluctuations. You'll stay invested in the market, and no matter what, you'll come out good in the end. The last strategy I have for you guys today is make consistent contributions. When people hear of an upcoming recession, some people get scared. They get scared to put their money in the market. They hold up cash. They stash more cash than they need to be. Again, I truthfully understand that you have to have a cash balance in your account to look for opportunities. I understand some people have a set amount of cash they want to hold, which is great. That's a smart investing strategy. But what I'm talking about here is some people get so scared of recessions coming, losing money, underperforming the market, that they don't actually make contributions to their portfolio at all. That's what I mean here by make consistent contributions. Every month, have a set amount of money you're going to invest for your future, whether it be 5%, 10% of your income, whatever it is, and invest that into your portfolio no matter what time of year. That consistency helps control your emotions as well, because you are buying it at highs and you are buying at lows. You are dollar cost averaging into your investments, which is a very common strategy. So that consistency almost makes you feel comfortable each month, because you know that it doesn't matter if this money drops this month, if I'm investing at an all-time high and in a year that I'm going to be down, because you're going to be consistently investing each month, that even when it drops, you're going to be buying more that month. So even though you bought at a high, you're going to be buying at the lows that follow, if there are lows to follow. So you don't ever have to worry about losing out all your money or dropping it all, especially because you're not making that one singular lump sum investment. So overall, recessions come, recessions happen. It's a part of the economic cycle. Don't stress about it. Don't worry about it. So these are just 4 strategies that you can use to invest throughout all market cycles, regardless if we're in a bull market, a bear market. If you follow these strategies, you will be comfortable investing in the market. Again, this is not financial advice. I'm not a professional. This is just my opinion, and these are just some tips to help you maybe overcome your emotions and different strategies to help you invest consistently for great returns over the long run. I'm Gen Z Investor. Subscribe to my channel if you like these videos. I come up with new videos every week talking about investing and personal finance. See you next time.